market watcher of this morning. Michael, there's a lot of people on Wall Street seeing a recession either later this year or early next year. What's your outlook? You see a recession?
Yeah, I guess it depends how you define that recession. Is it 2 quarters of consecutive negative GDP growth? Is it 3 quarters? I'd say there's a high probability, but are they minus half a point, or are they minus 5 or 6 points? Is this a dramatic downturn, or is this just kind of a slowdown that takes us into negative year-over-year growth? I'd say probably the latter is fairly likely. We go into this with an extraordinarily robust labor market, twice as many job openings as people that are unemployed right now. So that's pretty healthy. You have $4 trillion in cash to the sideline. Consumers pretty healthy, although that is starting to deteriorate. What I think the problem is for stocks is not so much this economic slowdown and inflation. I think a lot of that is priced in. What I don't hear enough people talking about, enough people thinking about, is the overhang that's coming from the balance sheet runoff. So next month, the Fed's going to let $45 billion run off their balance sheet, and then in September, it's going to go to 90. If you recall, in 2018, it was the greatest year of earnings growth in the history of the S&P 500. However, the stock went nowhere because the Fed raised rates 6 times, and they let $1 trillion run off the balance sheet.
So is the worst over on the stock market or not?
Maybe we see another 3 to 5% downturn from here, but I think we're in a volatile range-bound market. I don't know that the bottom's necessarily going to fall out because earnings are missing expectations, but they are not horrible. And so now Target is trading at 10, 11 times earnings after this dramatic sell-off today. I mean, that's very, very overdone considering you have a fixed 15, 16 multiple on the S&P 500. So, I mean, I would be buying the consumer staples, the XLP today, on the back of these Walmart and Target earnings. It's getting oversold. And what these retailers are saying is people are buying the necessities, the staples, more so than discretionary items, which is where the higher margins are. But, I'm not going to stop shaving regardless of where the economy goes because, my beard looks terrible when I let it grow out, right?
You used to be the Super Bowl, and you were for many years on this program, but you're not now. You're just not now. Last word to you.
Yeah, Stuart, we've had a tremendous equity bull run, either from the election in 2016 or all the way out of the financial crisis. So to give back 15 to 20% of those gains or 30% of those gains, not the end of the world. However, bonds being down double digits at the same time is really painful. I think we come out of the other side stronger with this. We need to remove some of this accommodation so the next time there is a shock, we can do something.
You got it. Mike Lee, thank you very much indeed. As Mike was talking there, the Dow dropped some more. We're down 500 points on the